All right, so good afternoon. What we're going to do is we're going to get right into the complete step-by-step um, strategy. So we're going to look at, I want to show you all exactly what it is I'm looking at, for analysis, from analysis wise, what indicators are being used, how to use them, and then all the way to the actual entry of the trade. And then we can talk about risk to reward, things like that. So we'll try not to make the video too long, as I want to make sure you get the important pieces out of it. So first screen we're looking at is my higher time frame screen. And on this one, so we take a quick look at the daily, and of course we're looking at USD JPY. That is the pair that I'm currently trading. So what we're looking at on this daily time frame is basically we're looking at directional bias. So looking at this daily time frame, we see that our directional bias is to the downside. We see where we had the shift for the most part in this candle right here. That came roughly 2 days ago. So that was on Tuesday, and that was off of some news that happened. And also with the JPY, the yen currency, having some intervention from the Bank of Japan. That spearheaded this down move right here. And as we can see, we had a little bit, maybe some profit taking or something yesterday, and then we continue with the down move today. So on the daily, we can see we have our directional bias, and more than likely what's happening right now is that the price is going back and recouping some of these open trades right here in this liquidity. So right here in this wick, there's a lot of buy liquidity that can be utilized to fuel this down move. And as you can see, price, now this indicator right here is our higher time frame liquidity indicator. Which is giving us right now. I think these settings are for the daily and the weekly. So these are daily resistance here in green, our weekly resistance right here, the thicker lines, and then you have our daily and weekly support zones right here, areas. So as you can see, price did bounce off of this daily liquidity area zone right here. This is the one from the previous day before last, from Tuesday. This is the one from yesterday. So price came up, tapped into it today, and then it's starting a good down push, more than likely towards this daily support area right here. Before we get a move up, we may see price grab some of this liquidity for a bigger move back into this liquidity zone. So that's something to look at from a daily perspective and how we utilize it. Another thing that I want to show you all, first, let's see what the pip count would be. So from where price is currently right now, um, to this liquidity, this supportive liquidity on the daily, roughly over 100 pips. So we still got about 100 pips to go in this possible down move, right? Then overall, we can get, so we can see where price came from. And actually, I got in this move at the top this morning. It already hit my TP. I got it for roughly 60 pips this morning, what have you. So 200 pip move overall from liquidity zone to liquidity zone. Everything else typically in between is just liquidity. For the most part, price will continue to move towards this liquidity support zone right here. Any liquidity that's created in between won't be as significant as these two areas here necessarily, right? So what that means is if we get a area of liquidity support zone right here or in this area before it gets to this area of support, we could get a reaction but more than likely not enough to throw us off of the current course of getting down and tapping into some of this liquidity down here. So just something to think about. All right, so two other indicators I want to show you real quick on the daily that we utilize. These are more so for our entries or what have you, but this right here is the currency strength meter from Lux Algo. This helps me to keep track of the strength of the currency. So as you can see, this is the USD currency right here. Zero strength in the USD currency today, which tells me that if you have a USD pair, if the USD is the front currency, that means you should be selling that pair, which is indicative of what we're seeing with the USD JPY. Now, consequently, a good thing to see when you're looking to put in a sale or you're looking to your trade bias is that the JPY currency is strong, is showing a lot of strength for the day, and that's what you want to see, for validation of sales. So again, if but now on the other side, if the USD is strong and the JPY is strong, you're going to get a ranging market. And what you don't want to do is you don't want to be looking for trades in a ranging market. um, Unless you have a pretty big range. If you have a good range, that's roughly a 20-30 pip range from end to end, then you can look for some opportunities. And we'll talk about that on a later video. But again, this currency strength meter just gives us even more validation and more reliable validation of, and it's a quick look to see that the JPY currency is much, much stronger than the USD currency. And also the JPY currency is stronger than GBP. So if you were trading GBP JPY, so GJ as we like to call it, more than likely for the day, GBP JPY is currently in a sale. Like most Japanese currencies pairs are for the most part today, unless the Japanese currency is the front currency, then it's in a buy. So here, if GBP is stronger than JPY, then you should be buying the pair. If it's weaker, then you should be selling the pair. It really is that simple. So you look for opportunities on the side of the currency that is stronger. So you look for buy opportunities on the side of the currency that's stronger. You look for sell opportunities on the side of the currency that's weaker. So that's pretty much how we break that down. And then right here, we have the oscillator matrix by Lux Algo as well. And this can help us as well to look at, this is additional confluence, and that's, really what this is. But I do like the RSI probabilities within this oscillator. It does give some signals. I don't utilize it for signals or entries or anything like that. But again, to validate your move one way or another, this could be a good confluence indicator just for that purpose, but not needed on this high time frame because I'm not utilizing it for entries, but just to kind of see how strong the momentum is from the daily perspective, a higher time frame perspective. That's why I have this indicator on this higher time frame chart. Okay, moving on. So what I typically do is I'm watching the 4-hour really for my swing for my swing trades. And again, daily bias for daily directional bias instead of 4-hour, but more so I really like the reliability of the currency strength meter here. And I have the setting set to daily, and you can do that by going here and you go here and you just select the day. And what I've done also is I went to the style section and I took off the currencies that I don't want to see labeled. And I don't want to see the lines for. So if you have those boxes checked, then you'll see the labels on the side here and you'll see the lines, the momentum indications right here. I really only need to see the meter, the currency strength meter. So I just unchecked all of the other currencies that I don't look at. So I'm really only interested in USD and JPY, which is why I have everything else unchecked. So if you want to go into the settings, feel free to do that. Like I said, I keep it on daily. It will adjust depending on what time frame you're on, a little bit, but I found just keeping it on the daily, especially on my higher time frame analysis chart, kind of keeps me honest, as far as how the currencies individually are tracking and strength for the day. That's very important, especially when I'm looking at slightly bigger trade setups or what have you. All right, so that is that there. And then, like I said, these are the labels on the side. I'm gonna go ahead and take that off. All right, so these are the labels on the side. So here you can see where JPY, the strength of JPY in comparison to USD, right? So this is the USD label, this is the JPY label. And, I can clearly see that JPY is stronger than the USD. So just another thing to look at. All right, now we're going to stop sharing. I'm going to stop sharing this screen and I'm going to share another screen with you. Okay, so now that we've done our higher time frame analysis, and look, now we're going to get a look at our actual technical, daily analysis for where, we're looking for the actual trade setups for the day, right? So I'll take you through first, we'll take a look at the indicators that I have on here. As you can see, first we got a previous day's high, previous day's low. Good to know, good to have, but you don't necessarily need it for your trade setups. So basically what we're looking for here, we have our market structure. This indicator right here, if you don't already know, this is our higher high and lower low live indicator. This helps us to keep track of the major market structure, right? Major structure, market structure in the market. So one of the things that I was looking for today, and of course you see I got my my liquidity here. So here, this is the 4-hour and the daily liquidity lines that I have on this particular chart to keep track, right? Then here is, this is the Lux Algo profile. I'll tell you exactly what it is. So this is the Lux Algo liquidity sentiment profile auto anchored. They did do an update a few weeks ago. So it is functioning a lot better. And I'll go through how I utilize this for my trade setups as well. This indicator right here, you really don't need. So I'm not going to really talk too much about it. This is the Red K Everex indicator, but this is a basically showing volume, volume and momentum type of setup for your trades. It is very reliable or what have you. I will tell you that it is very reliable as far as trade setups. But as an RSI, I found that it was kind of lacking. Now, of course, it does line up, when it comes to trade setups, but I did find it a bit the volume bars here. Because I utilized the minute time frame for my entries, I found it to be a little bit noisy and confusing to enter my trades. Or what have you. But so for the purposes of your analysis, though, you don't really need it. So what we'll do, we'll hide this for now. I did just want to show you all that I do have it on here, but I'm not using it for my technical analysis, nor am I using it for my entries. But everything else that we have on here, I am using for my entries, right? All right, so as we can see here, so again, we have an oscillator matrix by Lux Algo here. Now, this I am utilizing for technical analysis purposes. Of course, this is my technical analysis chart. So again, with the profile, one of the things you'll see is we have liquidity zones here. So that's what you see, this blue here. So basically this is saying this is sell side liquidity. And basically what it is it's trapped buy trades, trapped buyers right here in this area, right? So what that does is that gives you liquidity for a down move. So all of these this buy volume right here in the profile. So on the right side of the profile here in the red and green is your sentiment. That these are orders that have come into the real time. It's pretty much live. It updates, as orders come into the market. And this one is actually set, I believe, for the session. And I did that. I set it for session because I wanted to get a look at. You can do auto or sessions. It's going to give you the same thing. So you go auto or you could do sessions. It's going to give you the exact same layout, right? And basically what this is this is just for today's session, right? And it automatically updates every day as volume comes into the market and sentiment. So as you see, so buy and sell sentiment at each price level, right? So I'll blow this up a little bit so you can see a little bit better, right? So basically, it's telling you, like I said, what I'm utilizing this for, right, is to see what volume, what the sentiment is, what the volume is currently at certain price levels, right? And when I was looking to get into the trade, so a couple of things that I look for to get into a trade. Typically, if I'm looking for a sell trade, I'm looking for on market structure. I'm looking for a lower high. To post for me to get into a sell. Now that does not always have to be the case to get a lower high, because I will tell you for this trade this morning, it was actually showing a higher high, and this is where I got in right here. It was showing a higher high. I saw that, but the other thing that I saw and understood was that this move right here was taking all of this liquidity right here. That's exactly what was happening. So remember, using our profile right here, right? We see that now this blue right here indicates low volume, right? And we'll get into what that means, right? But so we have buy trades, but it's very low volume. So typically what that means is these are like maybe stop losses or it's breakout traders who put in buy orders that's waiting for a price to break out of this zone right here, and obviously looking for price to continue to the upside. But that's not what happened. It wasn't a lot of volume there. So price ended up reversing. So, but you could see that real time. You could see that real time that there was a possibility for price to reverse because one, you had very low volume, which is what this blue is right here. Blue indicates low volume, gray indicates moderate volume, and then yellow indicates high volume. So these are high volume nodes right here. And as you can see in this high volume area, you see more sentiment from the sell side. What have you. You do have some buying, right? Of course, you're going to have that. You need buyers in order to get sellers in order to push the market, in a direction, right? But there was zero sell volume at this here. The sentiment wasn't for sale, it was all for buy. So again, more than likely with it being very low volume, these were breakout trades and or stop losses that's sitting right here, right? So the market did push, and this is where I looked to get into the market. Once I saw this, I also saw that liquidity was being tapped into. As you can see, the liquidity being grabbed right there. So once I saw that, I did look to my 1 minute time frame for my entry. When I saw that price got up here and it was starting to reject out of the zone, and everything was looking like it was going to line up. Or what have you. So the other thing that I looked at too is, something to consider, when putting in your trades is, again, so we see that we have high volume nodes right here indicated by the yellow, right? So, you want to see what that looks like because you want to see what those trades are. Do we have more buy trades sitting in this high volume nodes, or do we have more sell trades? That gives you an indication of, how good of a move, this down move is possibly going to be. So if there's more selling in here, if there's more sell pressure, and all things remain true, up here and everything, we got a good rejection. That means there's a very, very good good likelihood that the market is going to continue to move through this area right here. Now, when you get into low volume areas, and then you can see right here, right, where, you know, the volume starts to drop, you know, significantly. And right here, right, you have that fair value gap. So basically, this fair value gap is indicative of price just continuing to shoot down. You know, once it made it through all of this, right, where you can see right here, you know, wasn't a lot of there wasn't a lot of sell activity. Looks to be some buy activity, or what have you. But, you know, again, price continued to push down, so it created this fair value gap right here. So, you know, price pushed down, and you see there's a lot of buying right here, right? But price continued to push through it. Price continued to push through because the volume just wasn't enough to compete with the volume that was here. So price continued to push through. And of course, you know, there was some battle. You know, we see the wicks here, where price came back up and got pushed back down. Price came back up, we got pushed back down. So it just became liquidity for the overall down move. And as you can see, as price was able to continue to win the battle and pushing through. And here's how you know you can stay in this move, because again, I told you I was in this move, right? I think I had my TP set like right around here somewhere, to be honest with you. Like I said, I was targeting a 60 pip move, because there was there was some liquidity. There was a liquidity area right here, and so that's what my target was on the 15-minute time frame. So that's where I ended up getting my TP, you know, out of the trade that I got in, right? Like I said, roughly about 60 pips. And I was keeping in mind, you know, what the sentiment looked like. And of course, we're looking at moderate volume, or what have you. But as you can see, once my move was done, price continued to push, and it gave, you know, even more of a push, you know, once it made it through this area right here. And you see where the sell sentiment just took off, right? And, you know, boom, you know, we kept moving until we got to a low volume area. Again, you see where we have low volume, you know, you got some selling, right? But we're still looking at, you know, this is possible reversal, you know, indications right here. Very low volume, you got some selling pressure or whatnot, but it's very low volume. So that's indicative of possible reversal, you know, or what have you. So that's something to think about when utilizing the volume profile, you know, in your trade setups. Again, if you get into moderate low volume from an area, you know, there's a good chance that price can continue to push down. Now, if you want to validate that, all you got to do is look at, go back over to your the currency strength meter, and you want to see if you're in a down move like this, then you want to see if the JPY currency is losing strength or is it maintaining its strength. The other thing to look at is the USD currency. Is it gaining strength or is it losing strength, or is it not doing anything? And what I could tell you is when I was looking and monitoring, that there was no change. The JPY currency remained strong, and the USD currency remained weak. So that continued to validate this down move, right? So there was no reversal happening at that time. Or what have you. So that's a very good way to analyze the market, and to add, you know, to answer the question, should I stay in this down move or not? And again, to answer that question, you look at the currency, you know, look at the strength of both of the currencies. You know, if nothing is changing, if again, you know, I'm not going to reiterate it, but you know, if all things remain the same, then you know, there's a good possibility this move can continue, you know, in its current direction. Again, I'd already had a TP set, so I wasn't looking to necessarily stay in the move, but you can also look for, that's also an avenue to look for opportunities to get in the move if you missed the first move, or get back in the move if, you know, like me, you hit your TP, and you're utilizing the currency that doesn't have a huge spread like USD JPY, which is why I use it. You can go in a profit very quickly and get an even bigger move, because I'll tell you. So let's take a look at it, right? So from here to here. Okay, so yeah, right around here, yep, because you can see the liquidity. You see where we got some liquidity right here, and it, you know, pushed up a little bit. So this is where I had my TP. It was right in this area, 60 pips. And if I rewind it, you can see where the liquidity line was. All right, so that was roughly 60 pips, right? So that move right there. Now let's look if you had got in right here once price, you know, moved up. Maybe you missed this first initial push, right? But decided, I missed it, so let me get in. You know, we still on our market structure, right? We get this fair value gap, and we get another opportunity right here, right? Let's see what you would have got. All right, so another roughly 40 something pip move, let's say 45 pips if you missed the initial move, right? So not bad at all, not bad at all. So overall, we're looking at, close to a 100 pip move or to the downside in this overall move right here. Now, how do we utilize our oscillator right here? So this is how we utilize the oscillator. Again, additional confluence, not necessarily needed to for your analysis or your entries, but good to have to verify and validate what you're seeing in the market, right? So all I do is look at this to kind of see if it validates the move that I'm about to take. And when I'll tell you when I did take the move, it did not validate at the time. It was kind of setting up because this right here indicates buying. This indicates buying pressure right here. And of course, this indicates selling pressure. And the darker or the lighter is, the more transparent it is, the more pressure, it's actually showing, right? Or what have you. So I'm not going to give you a whole class on how to use this oscillator matrix, but that's pretty much what that means. These red and green triangles are also buy and sell signals. So this is a sell signal right here. Notice we didn't get one here, but again, I don't utilize it, for my entries again, but I do like to have it as additional confluence, and you can see where we did start to pick up some selling pressure, with this move in the metrics, right? And we see we did get a sell dot. That's what this is right here. So you see this dot indicates a sell signal. That's what it really is. And the green dots indicate buy signals. So you see we did get a sell signal, but I was already in the move by the time this sell signal came on the oscillator matrix here, right? And you can see where you got a buy green dot here for a buy, and then turn right around and gave you a sell. The other thing you want to look at is divergence, right? So you see here, price market structure created a higher high, and then down here you see where it actually created a lower high. Again, optimal entry right there. Now that we can utilize the oscillator matrix for the divergence purposes. Now, it's supposed to give you a line to tell you that this was divergence, but it did not. Again, I don't need it though to tell me that this is divergence. I already know that it's divergence because we created a higher high with price, but we created a lower high, with momentum. So again, it validates my trade setup. It validates my entry. Again, I didn't utilize it to get in, but it's good if you want to utilize it to validate, what you're seeing in the market and your entries. As you can see, we got the green triangle for a possible buy signal here. And then we got the green dot. Now, what I will tell you is nothing changed in the currency strength. The JPY remains strong and USD remains weak. So I would not look to take a buy. But if things were reversed and we were seeing some buying pressure come into the market, the currency, the USD was actually gaining some strength and JPY was losing some strength, then I would look to possibly get in here. A good way to obviously rule of thumb with trading reversals is allow the initial push to happen to kind of validate the direction, then let it come back for a possible higher low, and then you look for an entry if you're looking at reversals, unless you get a good liquidity grab. If price pushes down and grabs liquidity, then that could be a good valid indicator that the market is reversing and you can get in, from a low position. It doesn't necessarily have to be a higher low, but if you looking for a more conservative entry method, then you could wait for an initial push to the upside and then for it to come back and fail to create another lower low, and it create a higher low, and then you start to look for your entries there. But if not, if we come down and we grab some liquidity like we did with this high right here, we grab this liquidity right here, these trades that's trapped, and we do make a move to the upside, that could be a pretty good trade. Just give you some tips. You don't necessarily, everything doesn't is not always black and white, right? There's different ways to do this thing. So just pick what works for you at the time. It may change. These are just some things to look at for your setups. All right. Last but not least, we're gonna go We're going to stop sharing this screen, and we're going to go to our actual entry screen now. All right, so we're going to take the party to our entry screen. Yeah, make sure I got the right screen. Okay, here we are. All right, so this is our 1 minute screen, and basically what we're looking for, for our entries, we're just looking honestly for the buy or sell signals. I utilize the UT bot signal indicator for the buy and sell signal. So, a lot of signals, but I'm only utilizing it when, I see my setups on the 15 minute and I'm ready to enter the market, so that's all I use it for. But, all of the same rules still kind of apply for the most part. As you can see, if you're going to use the oscillator matrix, the same rules kind of apply there, but it's giving you, indication of what's going on in the market. It's a little closer to the market with the lower time frame. So when you're looking at your entries, you could, if you're looking for a sell trade, but it's doing this right here, then you know not to enter right now, because again, we're going in the wrong direction. That's not the direction I want to go in. So we were going to wait, for it to meet our criteria, and give us what we're looking for a good entry. But and again, it's the same, pretty much the same setup. From your technical analysis from your 15 minute, you're basically looking for that same valid setup on the lower time frame, but you're looking for it for your entry though. And again, you can, the good thing about this is that entering on the 1 minute is that you can set a good stop loss. And what I mean by that is, so let's say we were to kind of get into let's say this buy trade right here, right? And the rule of thumb, you would want to set your stop loss. You don't want to set it right on the swing. You want to set it a little bit away from the swing, right? So let me give you a good example. So let's say we decided to set it right here at this liquidity area right here, right? Let's just say um, for purposes. All right. So I want to see how many pips. How many pips is that from here to here? All right, so you got roughly a 10 pip stop loss. So that would be a 10 pip stop loss or so, or what have you. So again, so rule of thumb is you want to set your stop loss just beyond whatever the swing is. So if you're putting in a buy, you want to set it just below the nearest swing low. If you're doing a sell, then you want to set it just above the previous swing high, because there's a possibility that price could come back up and grab some liquidity from that swing area, and you don't want to get stopped out. But if you do it on the 1 minute time frame, then you're giving yourself some room, and you don't have an extreme stop loss. That's a lot of pips. I utilize the 5 standard lot, which is roughly $50 per pip. So if I do like the stop loss I had this morning for this trade right here was about 7 pips. And again, I just put it at the swing point. So it was a 7 pip stop loss. So with 50, so $350, $350 stop loss or what have you, for again, I was targeting 60 pips. So you do the math, the risk to reward was pretty decent. Again, like I said, I'm doing my entries on the 1 minute. You put your stop loss, because again, if price starts to break structure on the 1 minute, then there's a good chance that it's going to start to break structure on your 15 minute or your analysis time frame. So that's just something to think about and to be aware of when it comes to your risk to reward. There's many ways to do this, but you can get really, really tight, risk to rewards and stop losses and stuff, utilizing the 1 minute for your entries and your stop losses and everything. And it's a good idea to trail your stops as well. But like I said, you want to just make sure you give yourself enough room in case price does come back against you at some point. And again, doing it on the 1 minute can give you a little bit of take a little bit of pressure off because you are doing it on such a low time frame, and you're not really risking a whole lot to do that. So hopefully this has been helpful. to you. All as always, feel free to reach out if you have any questions, and I will see you on the next video.